Hello everyone, it is Evan here from the Trade Risk on Friday, November 20th, 2020. Before we get into our usually scheduled market analysis video here, I want to bring your attention to two announcements. The first is we officially launched our second trading system this week. It's officially open to the public. It's called Lamerick. You're looking at the primary informational page here. It's been kicking butt this year in terms of performance. We've been trading it for a while internally. Merlin subscribers have been trading this for the past couple of months, and it is officially sort of open for registration to the public this week. So it is a very tactical short-term trading system. It trades individual stocks, large cap stocks, and it trades both long and short. So it's tactical, it can hedge on the downside, it can profit from stocks falling, and of course, as we're big believers in, it is an end of day system, so you don't have to stay glued to the charts. You can have a full-time job. You don't have to be worried about placing orders intraday. So we're excited to offer this out. We think it can do a lot of good for people looking to sort of manage risk, grow their portfolio. Everything here is very transparent, all the performance details and information. So I encourage you to check it out at the Lamerick page here. So right to our main website, you can see this drop down under trading systems. And second announcement is that we're actually running a sale next week. And that doesn't happen often. Those are words that you don't usually hear out of my mouth. We typically don't really, frankly, we don't do a ton of marketing on our products, but we don't really run sales either. But this is the time of the year where we are. And everything on the site is going to be on sale, including Lamerick. So if you're excited about the system, you can read up on it the next day or two. But don't purchase it yet because you'll be disappointed when the price goes down next week. So everything across the site is going to be discounted. If you aren't familiar with our products, head to the website, check out the Merlin trading system, the Lamerick trading system. We're going to have a bundle package for the both of them that's pretty steeply discounted. We've got a TC2000 store. We've got our watch list that we update weekly for traders. All of these things I think do a tremendous value and service for any of you active kind of swing traders on there, swing traders, and even the scans for day traders or longer term. Those work as well. So that's it. That's the pitch. That's the reminder. You're probably not going to hear from me too much more on the sale. So check it out. It should launch, I think Sunday night is officially when everything goes on sale. But basically next week on Monday, you'll be able to see it. You'll see a banner on the site. And if you're not on our newsletter, that's how you can catch all the information we're sort of sharing in the promo codes on the newsletter. So hopefully that helps. I get often a lot of inbound requests asking for discounts, and we frankly just don't do them. But here's the time, and I hope it helps you. And if you have any questions, you can certainly leave a comment below or reach us on the contact page here, and I'm happy to help. So with that, let's get into this week's episode. All right, let's dive in here. Part one, we break these videos up into two parts. And in our first part, we're going to review everything that really just went on this week in markets, from volatility to market internals to performance. And then in part two, we're going to jump into the charts and really sort of look at those bigger trends and make sense of all of this action. So let's kick off with some of the stories from this week. It was kind of a quiet week. It was frankly a little bit boring. Ranges were pretty tight, and it was some quiet trading really across the board. The Russell 2000 still is the outperformer right now. This has been sort of a consistent new theme for the past few weeks, ever since we started kind of sniffing out, I guess a little before the vaccine news, but Russell 2000 continues to work. And the bond market this week saw a pretty good bounce, and we're going to talk about that throughout this video as well. So if we look at the numbers, you can see that we were mostly negative here. So Dow, SPY, Nasdaq were in the red. The Russell, you can see, was the standout there, 2.5%. And then even international stocks, so world stocks here minus the United States, performed pretty strong. Take a look at the 1 month numbers here, and you can see also this trend that has basically taken place over the past several weeks. You can see first three are kind of laggards here, still positive performance, so I don't think we can really complain. But when we take that relative to the Russell and international stocks, you can see just where the outperformance has happened. So I think that's notable. That's still basically persisting into this end of the year. If we look at market internals, here is a strong week. So we saw 596 net 52-week highs across the 5 days. Again, Friday numbers are estimates, so they're not final just yet. Most of those came earlier in the week. We sort of tapered off a little bit on Thursday, and I think we're going to taper off more on Friday here once the final numbers come in. So we'll pay attention to that, but strong week in aggregate. Same thing with the cumulative AD line, and you can see we are running still kind of hot here, just on the sort of bullish side, I suppose. Percentage of stocks over 20 SMAs sitting around 78%. So when we look here at the 52-week highs minus lows over the past 30 trading sessions, kind of sum it all up and score it over time, you can see we've got a nice trend here to the upside. It's exactly what you want to see in healthy markets. You want to see the number of stocks hitting 52-week highs sort of expanding up into the right like it is right now. So as long as that continues to happen, life is good, and there will remain sort of a bid or current to the upside. Now, if we look at sector performance, you can see things were pretty mixed this week. Again, energy just having a blockbuster week. You can see the 1 month performance for energy is 18%. Nothing comes close to that performance here on this chart. So energy is really kind of running away with it. Industrials was number 2. Materials was number 3. On the downside, we had utilities, which took a bit of a hit. We're going to talk about those later in this video. 4% nearly to the downside. Healthcare down almost 3%. Consumer staples down 1.5%. If we look at volatility, really no change at all. Again, we want to talk about things that are not moving much, or the ranges are tight. You're seeing it here in VIX as well. Basically, term structure kind of not budging from what it was last week. We're still looking at a VIX around 23, which for 2020 is low, but historically we know that is still a very high level, and really not much else to speak of here. But we can see that, of course, this VIX structure looks much healthier, so to speak, than it did prior to election week, and we talked about that last week. If we look at interest rates and credit this week, we saw yields fall about 7% across the board. That was kind of the first time we've seen that TLT catching a bid. So bond prices move up when yields go down, and so we're going to talk about that a little bit later in this video as well, and what that means. But the yields have kind of been on the rise here the past few weeks, and a lot of people were kind of thinking, oh, the bottom might be in for yields, and maybe not so much with some of the action we saw this week. So we'll talk about that a little bit later. You can see credit markets pretty happy this week as well. And if we go to the dollar and commodities here, dollar was weak. Gold and silver also weak. And we did see a bit of a rise bump in crude oil and agriculture. Natural gas still not having it though, 11%. There were some macro catalysts on that, or headlines hitting on natural gas, I believe, early in the week. So if we look at the report card this week, it was constructive. It was an A-. Basically, everything kind of, shaping up pretty nicely here for the market. Again, that's not something you may intuitively understand by just looking at kind of the numbers, at the top level. But when we look at volatility, when we look at, risk sectors and breadth, we can sort of get a little more granular here in our analysis. Last but not least, if we look at our trading systems here and how they're positioned. So this is formerly we were just looking at Merlin, and we would show sort of the allocation that it had. And so we've got 2 trading systems now. So we have Merlin on the top, we have Lamerick on the bottom. And you can see how different these 2 trading systems are, and how they're positioned right now. So if we look at Merlin on the top here, it's basically a little over 60% invested in this market across 30 positions. So it is pretty, kind of moderately invested, and it is looking to, kind of continue to ride these uptrends. It obviously hasn't used all of its cash or exposure or margin in some case, but it is leaned into this market and, sort of benefiting from the general uptrend. Now, remember, Merlin's time frame is a couple months, so it's not looking at the very immediate term. Whereas the Lamerick, our trading strategy on the bottom, this can go up to 100% net short, or it could go all the way up to 100% long. And you can see basically that right now, it's positioned basically net short, 40% short. So it's not using all of its cash either, but it is across 5 positions short this market. And this is kind of a conversation we've been having internally with Merlin subscribers, is basically the diversification you get by trading both of these systems. It goes to show that they are doing 2 very individual sort of unique things. And when you trade these basically together, so in my case, basically allocating half to Merlin, half to Lamerick, I'm basically, kind of neutral on the market right now. I'm a little bit extra on the long side, but generally speaking, I don't have, too much exposure one way or the other. Now, of course, these trading systems can coincide with one another, so it is very plausible. Merlin won't short anything, but it's very possible that we could be 100% long on both trading systems. That will happen at times, but right now we're seeing just a good kind of diversification there. So that's currently how we're positioned right now. That's what the strategies are looking like. So with that, let's jump into part 2 here in just a second. Okay, we've got TC2000 open. We are looking at our equity market grid. Price itself are the white dashed lines you see on all these charts. Our colored dots here are a custom smart trend filter. This will be on sale next week. So if you're a TC2000 user, you've been looking at this indicator here, you can get it on sale next week. But it measures price and volume, trend, and trend strength. And we're looking at a weekly time frame. So if we look here across the board, even though we did see the Nasdaq down this week, SPY down, and I guess we're not showing the Dow here, but that was down as well. Regardless, we still have uptrends across the board on this weekly time frame. So we've got bullish outlooks here. They printed this week, so we came off of a neutral reading these past 3 weeks. So we're back to bullish now. Trends are up. Russell 2000 again stayed bullish, continues to remain strong, and you can see also ACWX here also bullish. So our outlook here on the longer term time frame continues to look constructive. And if we go down to a daily chart, there's basically no changes here either. So the shorter term time frame on the daily still is showing bullish readings on all of these markets. So that is kind of the current trend positioning, path of least resistance. That's generally how we like to frame it and think of it. And so if we go to some of the candlestick analysis, so some of the shorter term kind of supply-demand analysis here, and we look across the markets, we look at the S&P 500, it opened this week up here, so it had this nice push to the upside here, about 1% higher, got back up towards this gap up high here back on the 9th, if you recall, and then it basically faded for the rest of the week. So the highs were put in on Monday of this week, and then we essentially sort of grinded lower here, and we did close below this 35.80 level, and I think that's pretty notable here in the short term. Again, this is very short term, so if you're longer term trader looking at multiple weeks and months, you don't care about this. You can think of like our Merlin system, which doesn't really care about the real short term unless it's a high impact day. But in the short term, we talked about 35.80 being a pretty influential spot, because remember, that's where the market topped out in September. That was the approximate open here on the 9th, which was a very emotional, heavy volume, big day for markets. And now we're closing back below it. So we sort of celebrated the new high here on the 13th. So this, remember, was Friday the 13th. We closed at new all-time closing highs. We had a follow-through session, and then we sort of drifted and gave it back this week. So it's not the end of the world. It's not something that has to lead to some big nasty correction, but it is notable. If you want to try and be a trader that gets ahead of the big trend changes, closing below 35.80 or so, I think is at least a little bit of uncertainty or quote unquote bearish action here in the short term. So if you're bullish on this market, you want to see us back over 35.80 and holding above that general area. We also talked about this being a good level to pay attention to, which is right around the lower 3500s. So this is approximately the highs here in October. This is sort of where we found some support just a couple of weeks ago, right in here. After we sort of reversed off of this high day, we found buyers kind of step in around this level. And so if we do continue to sell off or we open down next week, remember it's a holiday shortened week. We've got Thanksgiving. Markets closed on Thursday. But if we do drift down here, this is where we could expect dip buyers to maybe show back up like they did last week. And that'd be a reasonable upper level spot to look at. If we start cutting through there, well, we've got a lot of gaps to potentially fill in the SPY. And then things just become generally more dicey here if we start losing all of these upper pivots and fall back into this trading range. So it is a bit of a slippery slope up here because we got up here so fast, off this ramp up here in the first week of November. So now basically we'll see how the market acts up here. Ideally above 35.80, things would be much more comfortable. If we start losing the low 3500s, I think you got to be a little bit cautious here for the S&P 500. Now, if we look at the Russell 2000, you can see this is a much different story. Again, we can see how tight the ranges were this week. This was Monday's session, and we essentially went totally sideways here for the entire 5 days. We chopped around in a 4-point range, but we basically closed exactly where we closed on Monday. Notice we are holding above this gap right here. So again, we got a lot of gaps in these markets that are holding. But I mean, we sort of filled it here on Tuesday, but there's not a whole lot of supply underneath this range here. So again, if the Russell starts to roll over below 175, it can move pretty quick. So if we start losing and closing below 175 next week, I'd expect a quick trip down to 170. This has got a big open gap in here. There's another big open gap in here as well. You can also look at the Russell that it did finally break this accelerated trend that we were heading higher. So you can see from the October lows here, we were riding this uptrend. We started to break that slope a little bit this week. So, that's sort of the way the Russell's sort of set up right now. So there's a lot of potential action here for some type of turnaround or for some type of rug pull in these markets. Again, it's dangerous to, continue to short, as the saying goes, right? Never short a dull market. Kind of what we're looking at here, and especially Thanksgiving week, it's probably going to be a very low volume week next week. So that'll be interesting to see how that shakes out. But that's kind of the landscape we're looking at right now. Trends are higher, price action in the short term, a little more uncertain. And there are some hints out there that, the market's tired or potentially at some types of turning points. If we look at the Nasdaq 100 here, this is what we were, this was sort of the bear case, right? If you wanted to be, kind of a contrarian on this market, if you wanted to try and fade things, it was the Nasdaq 100 you'd look at, because basically here, this was the loud session right in here on this day, and you can see that basically failed at the October highs, did not get back up to the September highs. So we're looking at a market here that did not break to new all-time highs anytime recently, and it is still now, when we look at this recent price action here, still very tight, but still hasn't even gotten back up to retest or challenge the high here from the 9th. So Nasdaq continues to kind of underwhelm a little bit. It doesn't have to be a horrible thing. It could just mean that it needs more time. But these are kind of the clues that you're looking at here when you're looking at price action to say, okay, this is definitely the controlling bar here. This was the high volume, loud, bearish engulfing bar that failed up at the upper range. So that here now has sort of the benefit of the doubt, at least in my eyes. Remember, trends are higher. So this is where you get into a lot of mixed signals, and you have to kind of put the whole plan together. But basically here, from a price action perspective, this is sort of the controlling bar. You'd like to get over 295, really over 297 or so, recover the majority of this bar and break out to start negating the sort of technical damage or the technical overhang that this has. So that's sort of the way I look at it here. We talked about the fact that this could be some type of measured move here if it rolls over to fill this gap in here, and jury is still sort of out on that. We started to break down a little bit on Wednesday, but then Thursday we kind of flipped right back around, and then Friday we gave the majority back. So again, just a lot of chop and indecision there, and a lot of mixed signals for the market. So that's kind of the landscape we're looking at. There's lots of overlap and some tight trading right now. So watch for some range expansion. Same thing here in the in the Qs, break down or up. Same thing for the Russell. We talked about this tight range, could break down, could break up, but I think the levels here are pretty clear to pay attention to heading into next week. So hopefully that was helpful. Let's look at some other markets here. We'll go to volatility, still on a sell signal now, trading down around 23. Sell signal way back here on the 6th of November. That continues to be the case. If we look at TLT in the bottom left, so here's a daily chart, and we got a buy signal today, which is the first time we've seen one for the past couple of weeks. Remember, we had a brief one on the 5th that did not materialize. That was kind of a little bit of a whipsaw signal, but basically it's been down and kind of bearish here for a while, and you're starting to flip back up now. So I think that's notable. If you look at the weekly chart for the TLT, it is still on a sell signal though. So you've got, again, some mixed signals here. You've got a nice rally on the daily chart, but you're still suspect on the weekly chart. So let's pay attention to that, heading into next week. If we look at commodities, so gold printed its first sell signal here all this year. So this is notable here for GLD, the metal that's basically been taking its time consolidating and pulling back off of highs for the past 4 months, printing a sell signal there on the long-term time frame. Silver still has not done that at this time. You can also see DBC in the bottom right printed a buy signal. Oil hasn't flipped back up to a buy signal just yet either. If we go down to a daily chart and all these, we basically have kind of this picture here: bearish gold, neutral silver, and the prior signal was still bullish here in silver, bullish on oil, and bullish on DBC. So that is really the lineup there. If we look at sectors across the board here, not a whole lot of changes on a weekly basis anyway. We had financials print a buy signal. We had healthcare print a buy signal. Let's get into some specific sectors here. I've talked about energy so much, I'm not going to talk about that, but basically it was still the standout, and dips here are probably opportunities. I still think there's a good rotation going on there in XLE. XLB, so this is one that's holding up now. It's tight. It's one of these that are pretty tight here. You can see that, what I like about XLB a little bit more here, again, it could still break the wrong way, but it essentially broke out over 67. So this is the big relevant level we want to see this hold above. Obviously, the fact that it's still below this Monday the 9th, entirely is a little bit concerning, but the way this consolidation is taking shape here, a little more optimistic in XLB. So long as it's over 67, if it starts losing 67, then all bets are off. So I do like XLB, and something I would just give a little more time. There's really no true signal yet, but if it starts breaking over $70 and call it 40 cents, you could have that nice momentum move back to the upside. XLY I wanted to bring up just because how darn tight it is right here. So basically, again, this week it traded a very tight range, lots of overlapping, and it is still sort of underneath this October pivot. So this is something to just pay attention to. You get nice tight compression going on here, very clear level over 155.50. If we can start breaking over there, preferably on volume, preferably an expansion in range, then things can look pretty good. But we'll have to wait to see if that actually triggers and happens. And then I wanted to mention XLU, which probably got the biggest movement this week, and probably no coincidence. that TLT was moving and rates were falling. So XLU giving some back here. This was doing very well, kind of a leader, so to speak, which is funny to say, but just something that was seeing some very strong performance week after week these past 2.5 months or so. But it is starting to soften up, break some trends here, and lose a little bit of momentum. So XLU, I think, is notable. And then last but not least, take a look at XLK. Yeah, so again, we can see here, very similar to the Nasdaq, just not all that exciting on a relative basis. There's just other things that look better. You got this tight kind of consolidation taking place, but it is still kind of wedged and stuck underneath kind of these multiple pivot points of extremes. So until it can start, breaking over 123 and change, call it 124, I think you just got to be a little bit patient here for technology as things potentially set back up. So that's it. That's what I got for today's or this week's wrap up. If I missed anything, if there was something that you're looking at that I didn't cover, please leave a comment below. I'd love to know what's got your attention this week. What are you looking to heading into next week? And don't forget, we got the new Lamerick system that is available, and we've got our Black Friday sale next week. So head to the website, join the newsletter. If you're not on the newsletter, that'll keep you up to date with any types of promotions and things like we do like this. And I think that's it. So thanks as always for tuning in and watching. Have a great weekend. We'll see you back here next week.